All right. Good morning, traders. I'm Melissa, and welcome to Price Plan Profit. If we haven't met yet and you don't know, I'm a trader at Simpler Trading in the Trendy Trading Room and the SPX Room. A great community of traders, very supportive, of course, lots of great trade alerts and all of that, but most importantly, a place for education that you can learn to become a more disciplined, consistent, and profitable trader. So, good morning to all of you that are here live saying good morning in the chat. I try to catch all of them when I'm just sitting there waiting to go live. But once we're live, I don't do a lot of typing in the chat, but I will answer your questions as I see them come up and things like that. Today's live session and every Saturday's live session is all about me finding tickers in the stock market that I would be interested in setting up for swing trades the next upcoming week. So, we're going to get started here with the S&P 500. I'm using the futures chart because that gives me the most 23 hours of data each day. So I like to use the ES futures charts to assess the overall market. I was interested, this week it started out feeling pretty choppy, and then we had a couple of down days, a nice recovery day yesterday after coming down and hitting some key trendy support levels that we had marked on our charts intraday yesterday. And we recovered very nicely. At one point, the market was down almost 100 points and we ended up closing green on the day. So that was a huge rally there towards the end of the day. But it got me to thinking, is that rally just a relief rally back up into resistance? And do we head down next week? I noticed some signs of some sector rotation. What I mean is big money. Uh, Possibly taking profits in the more risk on areas of the market like tech, AI, things like that, and moving some money into the more defensive areas of the market like healthcare, utilities, financials, things like that. Sorry about that. So, when I see signs of that, and it was not until Thursday and Friday that I started noticing that, when I see signs of that, I just wave a little caution flag as far as being overly bullish on those risk on type names. And I want to look back at previous behavior in the market to get an idea of how it compares to this recent rally from April of this year. So what I did, I remember October 2023 very clearly. We were in a down range. We were trading to the downside from July to October of 2023. But we came into some very important trendy levels down in here, and my trading partner, John, and I were both getting very excited and putting on some longer term bullish swing plays down here. And it wasn't a comfortable time in the room necessarily because people were fearful down here and they thought we were crazy. It's just the clearest way to say it. Not everyone, but some people. And so October 2023 sticks out to me pretty quick, pretty well. So I wanted to look at price action from October 2023 up until we topped out in February of this year. So that is almost a year and a half of a very bullish trend. And what I like to do is run Fibonacci's here and just see on pullbacks, where were the pullbacks coming back to during the rally um, period. So if I go up, the only real pullback, you got a pullback here in December. It came down into the 236, the 23.6 fib, and then price resumed back to the upside. We made a top here in March of 2024. You got a pullback into actually below the 23.6, but into what we call the bull channel in the trendy room. And the price action resumed back to the upside. Then we topped out again in July of 2024. And you got another pullback there to the bull channel. And then the move up resumed. Um, uh, in August of 2024, we got another pullback almost to the 236, and the uptrend resumed. And then we kind of topped out here in December of 2024. And notice how long price kind of hung out in this area above the 236, but could not take out that high of 61.63. When I see that, I think of where we're at right now with a high and then a week of pullback, and really gets me in the thinking that we could be in for choppy conditions coming down close to the bull channel, but not really bottoming out, so to speak. Notice I'm going to actually place those fibs there. Notice right in here, we made this high and then we had a pullback, not quite to the bull channel here. We rallied up. We came back. We tested that high 1, 2, 3, and 4 weeks. And then we went down to the golden profit area, my favorite Fibonacci zone to trade. All right. So if I'm looking at this high that was made last week, and I'm considering that we could be in for some price action that looks like this. And if you notice, this lasted from December through February before we got the tariff tantrum and everything else that was involved in this pullback to the golden profit area. But that was a couple of months of very choppy conditions. I don't know if you were trading during that time. It was not the easiest time to trade for sure. It was better suited for day trading and shorter term type swing trades. Hopefully, no one was loading the boat here on bullish plays for longer term swings as we were at highs at the time, because they got their face ripped off on this golden profit pullback right here. But I am using this thought process for the same period that we're at right now. So, if indeed we just really chop around for the next couple of months, I wouldn't be shocked. But I want to show you measuring the current rally, right? Although for technical purposes, let me just get this on here. We made these highs, right? Notice there was no candle close below this 618. So for technical purposes, this rally from October 2023 technically was never broken. Okay. I know it felt like it in April, but it wasn't broken. So if I run the fibs and just continue them all the way up, you can see that the 236 here is 450 points away, which I know sounds devastating from a shorter term trading perspective, but it would not be from a Fibonacci standpoint devastation. Devastation happens if this 618 is broken and the rally from October 2023 were to turn into from a rally to a bearish trend. That would be more devastating, honestly. But I am going to run my fibs for this rally here from April of this year to the all time high that was created last week. And notice that the bull channel in this scenario would be a pullback to 64.53 to 61.43. As long as, even if price were to drop 300 points over the next couple of months, we would still be buying the dip, or I definitely would be buying the dip in this area because it's the bullish channel of this range right here. The golden profit area of this range is all the way down near 5,900 to 5,600. This would be a more substantial pullback and one that maybe we get into 2026 and we get a pullback like this. This is just for your information. This is the area that I personally, in my long term account, would be more aggressive adding to those long term positions. All right. So I'm going to leave these fibs on here for now. And I want to go to a daily time frame chart with these fibs on here. This is where price is at right now. The key zones that price pulled back into yesterday were based on this area of consolidation after a big, sharp down day on the 10th of October. And then we just spent over a week chopping in that range before we started heading back up. Price came back down looking for buyers in this area. And buyers definitely stepped in. Now, this was not an area that buyers hadn't already came back to discover price because they came back here in October 22nd. They came back here and looking for buyers. Were buyers willing to buy contracts or buy shares at 67.11? And they were. So then that's when we rallied up and made this new all-time high. Now, on the shorter time frame perspective, we've been heading down ever since we made that all-time high the day before Halloween, but came back into this 6,700 area and buyers stepped in again yesterday afternoon. So, although this zone in here is important looking for price discovery, notice when buyers stepped in on the 22nd of October The lowest price went was 66.90, but yesterday when they stepped in, price went down to 66.55. That means it made a lower low to really get the buying pressure to overwhelm the selling pressure. That is a little bit of caution there. As far as levels inside of this support area, that would be if we dipped back in here again this coming up week. The next level that I would really be keying in on for support would be down here at this purple line on my chart is a trendy indicator. It's a proprietary indicator. It signifies a buy zone, and that would be at about 65.87. So I want an alert on my chart in the event that next week proves to be a deeper pullback into this support area. I just want to be alerted that price is at the lower monthly edge. Okay. And the way that I personally play this is I like to buy XSP calls down here and give myself a week or two to expiration to play off of this further buy zone down here. Give myself a week or two to expiration buying calls here. That's funny. TRX. Yeah. Yeah. John Carter is the founder of Simpler Trading. So, yes, absolutely. Joe T, I'm going to answer your question real quick. Good morning, Mel. Quick question. How do you quickly add the white lines on your charts? Have you set up a shortcut in TOS? My method is much slower. Yeah, Joe, what you want to do is come up here to drawings and left click there. And under drawing tools, this dollar sign with the line underneath it, that's what I use to quickly place lines on the chart. And I just left click and it places the lines on the chart. All right. All right. So that's what I am seeing with price in the zone. Did I love this rally at the end of the day yesterday? Yep, sure did. Because I bought calls at XSP calls down here and I exited those XSP calls down here. I want you to notice though, inside this or on this daily chart, on this pullback, we had 1, 2, 3 days down, a chop day, then one day down, then a chop day, and then one day down. And really, this was a down day. I'm going to say 2 days down. I know it closed here right at the previous day's close, but it was a down day until that rally. All right. So, what we did by having these down days and consolidating days in between is we created sell zones on this daily chart on the way down. That means that bulls, right? You have a work to do to get back up and come back up to all-time high or make new all-time highs, right? Earning season for the most part is over, so to speak. Um, you still have Nvidia and Broadcom, they still need to report, but the meat of earnings season, we pretty much are out of. I know a couple of big names still left to report, but overall, it's winding down. So there would have to be some big, huge catalyst in the market that traders deemed bullish to really, in my opinion, blow through these areas of sell zones here on the daily chart. It can happen. It can happen with one tweet. All right. But for now, as a technical trader, I know that there is resistance that was created over the last week and a half, last 10 days of price action that isn't going to make this just a smooth ride to the upside. See, back here, we didn't have that immediate resistance above. Once price got above this sell zone, it was blue, 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 blue skies, boom, all time high. This is different than back at mid October when we finally broke out. Do y'all understand that? Do you see that? Do y'all see what I'm saying there? Dave asks, when I buy calls, how do you pick your strike? If I'm buying XSP calls, Dave, I just buy at the money. They're very affordable for my account. All right. So that's what I want to tell you going into next week is that don't look at the rally once we stopped the consolidation here on October 23rd and we went up, made new all time highs. This is not the same as this because with this, we did not have candlestick structure above. It was blue skies above. This scenario would look the same if we were up here with no candlestick structure up and to the left. All right? All right. Now, since I got that out of the way, let's look at my actual buy and sell zones here on each time frame chart on the S&P 500s. There is selling pressure here, and the way that we determine their selling pressure. We do not have candlestick structure, so I can't call this a sell zone according to my rules, but I have topping wicks, and topping wicks equal selling pressure. So I know that there is selling pressure on this weekly chart from 68.78 to the all-time high. That means if I were long, and I don't, it doesn't matter what I am long, when S&P 500 gets up to this area, I have to consider taking profits, exiting positions, or at the very least, moving all my stops to break even. Okay. So the other alert I want on the chart, I have an alert at the lower monthly edge in the event that we uh, continue moving to the downside. And I also need an alert at this selling pressure. All right. So this alert is going to note when it pops up on my screen, it's going to let me know we're at selling pressure and look at your swing trades and make some decisions about them. Okay, so two major alerts on my chart for this upcoming week. The first being down here at 65.87. This is an alert telling me, hey, look to buy a dip. All right. Then the alert up here says, hey, check your long positions for your swing trade account, not long term, for your swing trade account and tighten those stops, protect those profits because we're in this area of selling pressure. All right. On the daily chart, what does that look like? Well, isn't that amazing? Number one, see this yellow line? That's an upper weekly edge. That is my sell zone for next week on S&P 500. I know I got selling pressure on the weekly. I have an inside and down candlestick structure, inside and down candlestick structure. So two sell zones in here combined. Yep, I like that alert. And the daily chart tells me you better like that alert also. Notice on the daily chart, though, I have a line that's even closer to where price is at right now, and that is at 68.28 and a half because on November 5th, we created an inside candle, an inside day. This candle closed inside the body of the previous candle. And then the next day, November 6th, was a down day. All right. So 68.28 and a half is another area that I would be looking for sellers to overpower those buyers. On the daily candles, right? You have topping wicks, just like those weekly candles, right? So selling pressure in here, and it's also a sell zone. So I'm going to make this one gray just to because my main sell zone on the daily is above at that upper weekly edge. But this is uh, an area that buyers stopped stepping in around 68.28 and a half by 68.57. There were more sellers at this price than there were buyers. Okay. All right. Now, what are these lines down here, Melissa? Why not make this green zone huge? Because as we come and we test these lines of support, I I don't want a green zone that is 200 points wide because I don't want to set in a trade for 200 points if it's going against me. So these lines are support below or yeah, below price that I would be looking for buyers to step in. But because each of these levels have been tested before, I have shrank my green zone. All right. All right. Now let's look at the 4-hour chart. And this one is going to look very similar to that daily. I have these lines of support below, but I have my green zone all the way. Guys, this goes way back when we created this buy zone in here. Okay. And see how these lines of support were tested already? That's the reason. Okay. Now, I also on this 4-hour chart, I drew the Fibonacci of this down move last week. I started here at the all-time high where we started seeing selling pressure, and then the move just went down, 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 down. Okay. Just like on that higher time frame, ES, whenever I was measuring the uptrend. This is on a shorter time frame. I'm measuring this downtrend. Think of it as a secondary set of Fibonacci's. I know that overall for the year, we're in a bullish trend, and my fibs should be running from bottom to top, measuring an uptrend. But this is a secondary set of Fibonacci that I like to have on my chart for shorter term swing trades. Okay. So, right where price is at, or right where it closed yesterday, was towards the top of the bear channel. This is the same as a bull channel, but because we are measuring a downtrend, it's a bear channel now. Okay. you also have inside and down candlestick structure right here. So I have candlestick structure and a bear channel right here. All right. Then above there, from a Fibonacci perspective, I have the 50, the halfback of the if price were to rally up to 68.04, 68.05, it has recovered half of what it gave up from the high to the low. All right. Then notice the golden Fibonacci here is lined up in this inside and down candlestick structure. And this is an imbalance candle, guys. This is an imbalance candle to the downside. This one is an imbalance candle to the upside. Why? What do we mean? Look, if you are a person that likes to track volume, on your charts, one key thing, just looking at candles, is if they are of larger size than the average size of the candles, there's going to be a lot of volume. There's going to be a lot of volume in that move. There's going to be a lot of volume in that move. All right. So imbalance candles are important, especially when they're a part of the inside and down or inside and up candlestick structure. This one on the 4 hour did not have that inside candle and then the big rally up. All right. But my lower weekly edge, which on a 4 hour chart, I really pay attention to these weekly edges here, and my lower weekly edge is right here at 68.8346. So this is a buy zone for this week right now. And I could just use that 66.45 below my next line of support and call this the 4 hour area that I would be looking to buy a dip for a trade that I'm only planning to be in next week. All right. All right. Enough about the ES, but it's very, very important that you have a top-down approach when looking at the market, and the S&P 500 is the best look at the overall basket of the market. Okay. All right. Now, what did I notice when I've already went over this in great detail last Saturday about how I look for relative strength across multiple time frames. I jot down the sectors that are leading to the upside right now. So if you want more details about how I use this and this being koifin.com, watch last week's live video. I'm not going to spend that time this week doing that. What I'm going to tell you is that the sectors of interest didn't really change much. Gold had a pullback, but it's showing signs that maybe we are at some key levels. So I'm going to put gold back on my potential bullish swing trading list. It also gave me an idea of the possible sector rotation. And I want to take a look at the healthcare sector here because it is showing some relative outperformance. It's moving up as far as top sectors over the last month and the last week. And when I'm looking at these charts and these names that trade within the healthcare sector, I don't want to just trade any of these names. Number one, it has to be affordable for my account size. And number two, I want to see that inside of healthcare, it is actually leading the way or it is stronger than other names. So if I'm looking here, and I consider the overall sector itself and what it looks like. Notice green candles, we're above the daily cloud. Lots of strength, right? It's up near highs right now, which means I wouldn't be a buyer on Monday, right? I would need a pullback with the way that I trade because I am a dip buyer into support. But when considering names to trade within the healthcare sector, I want to see things that at least look similar. So I'm looking here, LLY. This one is in Fuego, a very, very, very nice run. It's very bullish. I believe LLY has a leveraged ETF that I could potentially trade. That would be ELIL here. Now, I don't know if they have options. They do. So that is a way that because for our account challenge, I reset my balance and decreased my allocation size. Some of these names just are not reasonable for price for me to trade, but I can trade the leveraged ETF based on this LLY chart and get an idea of or get a position that's affordable for my account. So I'm going to go ahead and add LLY to my bullish watch list. And for me, not saying for you, because if you have a large account and you can afford the option premium for LLY contracts, that's the way that I would do it. But because I set my account back to a small account and I'm using a $500 max allocation amount, LLY isn't feasible for me, but I can trade ELIL instead. Okay, so LLY fits that criteria. J and J is close, but it's no cigar. It's in the daily cloud. We have neutral candles. It's very choppy, so not really one that is looking strong within this group of stocks. Same thing about AbbVie. Red candles below the cloud, not showing a lot of strength there. UNH, no thank you. Red below the cloud. Abbott, same thing. Red below the cloud, no thank you. This would be, I will buy a dip on UNH, for instance, if I was looking for long term trades and it was at some key yearly edges. All right. Then ISRG looks good. This one, I don't know. Maybe someone knows if there's a cheaper way for me to play this, but I know for a fact that the option premium just isn't affordable for my account. So there's no need for me to do that. Let's see. Merck is close. It's getting above this daily cloud and the candle colors have went neutral, and looking right here at these arrows, this is a strategy to trade called an ACDC strategy or an accelerator decelerator strategy. And so I'm going to go ahead and add Merck here so that I have another healthcare name to potentially trade right there. TMO is too expensive. Amgen, same thing, too expensive. GILD, it was looking good until it hit this sell zone right up in here. And yesterday it tanked back down to what looks like probably inside and up. So buy zone area right here. So I'm not going to put this one on. I would rather trade these names that are above the cloud and showing strength. So that I added a couple of healthcare names to the account. And then another area of the market, OIH. Remember, that has been showing strength and rising on up for a while. So you'll notice that I have Halliburton on here and I have Schlumberger on my chart here to play oil services right here. Um, Let me see, just see if there's anything else, or are those two the two I'd like to play? And it looks like those are probably going to remain the ones I'd like to play. Baker Hughes is a possibility here. I had it on my chart or my list for a while, but I think I took it off because it is just so stuck between these ranges. But Schlumberger and Halliburton are some oil names that I have on there. Another sector that is trying to make some progress is XLE. Now, this thing, golly, has been beaten up year, all year, really longer than a year. And oil itself is still, I don't know, if it's still below $60. I know it was. Let's look where it closed. Yeah, it's still below 60. I mean, that's really low, guys. I have some long-term positions on for CVX. I got some equity in XOM. So I do have exposure here, um, and so I really don't have any XLE names on my watch list, but just keep your eye here on the energy sector. They could, if big money continues rolling out of the risk on tech and AI and quantum and things like that, XLE could potentially continue to benefit there. Ooh, it's 60 degrees. No wonder I'm freezing even with my blanket. All right. All right. So, just wanted to mention though, XLE is showing some rotation. All right. Right. So now I've got my list down to these names, and I want to talk about the tech um, sector itself and some of those risk on names that you will see on my list, like Apple, like AMD, like Amazon, such as Google. You notice those names, Palantir. You notice those names are still on my list. I chose ones that, yes, there is some signs of exhaustion in the risk on space, but these names are outperforming the others. NVIDIA, I didn't put on my list just because of earnings coming up, and I've got other names I can trade that I don't have the potential just choppy mess that can sometimes happen leading up right up. Earnings are on the 19th, so you have like 10 days, well, 8 days when the market opens on the 10th. You would have 9 days to trade that before the earnings report. And sometimes you can just get really choppy and range bound leading up there. Now, you can get the rally before, like like a month to 3 weeks out, and then you usually come back to support and chop. So Nvidia is not on my list, but look, Nvidia is doing very well this year. But Apple is a relative outperformer in this area of the market. Palantir, it's got some pullback, but what I really like about Palantir is I have a double stack of edges down here, and I could trade it with a pretty small risk and just use it for a trade I'm going to be in for 2 days to 2 weeks. So I left Palantir on the list. AMD, as far as the semiconductor area of that risk on market, AMD, AMD and Broadcom are looking good. TSM, I had that on my list last week, but I don't know. I just didn't like the price action, so to speak, as well as what I did AMD because Taiwan semis, I've got neutral candles, whereas AMD is still bullish candles. So that's why I swapped TSM for AMD there. MU, I love this chart and this name, and everything about it screams a relative outperformer in this sector. But the options just aren't affordable for my $500 allocation. So, but if you're interested in trading MU, your area to buy a dip, or where I would look to buy a dip, would be around 224 to about 214 there on MU. Okay. Yeah, so that's why you'll see AMD on my list as a potential risk on type of name there. Let's see, looking down. Oh, I know. Amazon, I wanted to show you the relative outperformance of Amazon and Google. So Amazon has pulled back with the market. It came into, or it's very near the lower weekly edge for this week, and it gives me a range to trade up to the upper weekly edge. So Amazon above the daily cloud remained on my list. Tesla, it was on my list last week, and couple of weeks ago, we got a trade from a chart that I'd given on a Saturday, and we got a trade to the upside on Tesla, collected profits. We got out. I took Tesla off my list because John in the trending room is trading Tesla right now, and I don't like to duplicate his trade. So I took it off my list there. TJ Maxx, by the way, is looking really good, but it's up near highs. I would need a pullback here in the consumer discretionary area of the market. I would need to see a pullback. I did not put TJ Maxx on my watch list because of earnings coming up, and it could just, it's at resistance, could drop down and chop in between support and resistance leading up to earnings. So I'm not going to mess with that. Other than that, these names down here, Lowe's, Starbucks, O'Reilly, Nike, and Chipotle, look like dookie unless you're looking for a long-term trade. So no need to put those on my list. Even Mickey D's is red right now, red candles. So yeah, Amazon is my choice out of consumer discretionary. And then looking at the communications sector, Google is my choice. It was on my list for last week. It just didn't pull back to my buy zone. So for Google, this is the area I'm looking to buy a dip in. And if there's some weakness and Google drops down to this area, and I'll go over the exact plan here in a minute, this is where I would be looking to buy a dip. Netflix, let me clear these drawings off here so we can just see the candles. It's been a train wreck ever since earnings. And you could see Netflix stay down in this area after a huge earnings drop like that. This could be several months worth of just nothing really happening for Netflix. But I believe it or not, Netflix is one of the names that I do not have equity from a long-term account perspective. So this name is getting close, or it got close to an entry for equity long term for me. Outside of uh, Google here, and Warner Brothers, I wish I would have gotten an entry, a pullback into this zone last week, but we just didn't. It just performed really well in a down week. It performed really well. I never got a pullback buy. I took it off of my watch list because although it is relatively strong, I would need a deeper pullback, and I want to focus on Google, which is closer to the area that I would need that pullback. But it's very possible if Google pulls back to the buy zone that Warner Brothers may be pulling back to the buy zone too. But as far as relative strength goes in this area of the market, in my opinion, the stronger names are Google and Warner Brothers here. You can see the rest of them look like Dookie. I was able to get some equity ads on Meta. So if you're in the trendy room, you knew where I was buying equity, bought at 605, and it looks like it closed above 620. So quick $15 per share there on this little rally for Meta. So even though price has dropped way down, it's at the upper yearly edge, and that was a place I was looking to add some equity. All right. All right. So now that I've kind of explained that for you, let me go through this list one by one. First, Alcoa. Alcoa is pretty neutral from higher time frame perspectives, but it has potential to run to the upside here. It's got a low risk, a nice inside and up candlestick pattern. Here's my lower weekly edge in here. Um, it would only be an 80-cent risk on this buy zone here. You've got a target right up where price is at right now of about $1.32. So this would be a risk of 80 and first reward is $1.32. Then here's some potential areas of resistance. As far as a trade, if I were trading Alcoa out to December, this area right here, which is the upper monthly edge, and this wick high would be a great place to target on Alcoa. All right. So I'm going to put an alert at my buy zone, and I make sure it says at or below since price is above it. And I'm going to put a note to myself, buy zone. Now, on this risk, I need to mention that I do wait for candle closes. So the daily candle would have to close below my zone for me to stop out of the trade. So that 80 cents of risk could be $1 for all I know. But I trade with an allocation amount that if it went to zero, it wouldn't wreck my account. Okay. And it wouldn't wreck my emotion. So very important there. Next up is Apple. talk about zones to potentially buy on Apple. I believe I set this off of a 4-hour chart, and I was looking to buy a dip on Apple all throughout this price action. You can see my alert here, it just never went off. So Apple's lower weekly edge is slightly above my zone and could be a place to go ahead and alert that it's there, right? And then watch price action, how it reacts off that 267 level. But this is really my buy zone for Apple. Um, that gives you a risk of about $4.30 there. And first reward is about a 1 for 1. And then obviously it gets better as these higher targets when looking at risk to reward. But I want to base my risk to reward on that first target first, and it needs to at least be a one for greater than a 1 for 1. But at ultimate target, I'm looking for a 2 to 1, and that would be $9 of reward there, and again, the risk is about $4.30. So that is within that better than 1 for 2 risk to reward. All right. That is Apple. My alert is set. That's my buy zone. These are the areas I would trim, and this would be my target on Apple. Next, let's look at AEP. This is a utilities or an energy play. I had a choice back here on AEP. Well, I really kind of had a choice. Okay. That thing played out to target, but I was already in NEE when AEP pulled back here, or I should say pulled back the second time here. So I told the room on this day, Wednesday, I told the room, hey, I'm already in NEE, so I'm going to pass on AEP. But that worked out great. It's still a great looking chart, and but it's very, very close to all time highs. So what I'm going to do is I'm going to put an alert on AEP for a pullback into about 116. And that's using the weekly cloud there. This was a buy zone on the daily chart. That's another area that on a pullback and then playing it back up to these levels. So somewhere around 118.83 to 117.34 if you wanted to play that daily zone based on Fibonacci's and where this rounding bottom, the kind of the lower end of that rounding bottom. All right. So I'll go ahead and I believe that'll line up. Yeah, that lines up with the 4 hour again. I'm going to go ahead and create an alert there at or below. And for the note, I'm just going to write daily. That tells me to look at my daily chart. So a stop on this trade would be 17.34. So a daily candle close. That's going to give me $1.50 of risk. First reward is going to be $2.40. And then next reward, of course, would be better than that. And if we take out this high of 122.85, I would use Fibonacci extensions to get higher targets. So that's AEP, and I have an alert set there. Now let's look at a game plan for AMD. This is one that I was more interested in trading from a lower weekly edge to an upper weekly edge. So it's a shorter term trade, and I would want to see a pullback on Monday or Tuesday to take this trade. So if I get a pullback 228.71 to 223.60, that would be the dip buy. That is going to be a risk of $5.11. This first target is about just short of $10 of a reward. And then obviously up here is much better. But this would be the first target. This would be a quick trade, buying a dip into here. My stop would be here below 223.60. And yeah, so AMD gonna put the alert there. Another thing I like to do, guys, is if I'm looking at some shorter term swing trades, is I like to watch these things on my PMZ pre-market zone, which if you don't know, that's my favorite day trading indicator. And I concentrate on three names to trade out of the PMZ each day. When I have a name like AMD that I'm just looking to play from a lower weekly edge to an upper weekly edge. What I usually do on Mondays and Tuesdays is watch these on my focus list for day trades and set them up like that. So, for those of you in the trendy room, AMD on Monday will be one of my focus list names. All right. All right. Next up is Amazon. Let's take a look at the Zon. I wish I knew how to move my image. I really do, Dave. I wish I knew how, but I can't. I can't figure it out. I am not very technologically advanced for sure, so I can't figure out how to move that picture. If I'm being honest. Claudia, why the 4 hour on AMD? Because I'm just playing and it's an edge play. And regarding not being an inside and up, it actually is inside and up. I just didn't scroll over here. See it? Inside and up, Claudia? Yeah, Dave, I wish I knew. I have looked and like asked Gronk and all of that, and I can't. So it is an inside nut, but I was just showing it off of this weekly edge. All right, let's look at Amazon. Amazon daily, I believe. Yep, here it is. It actually came into my buy zone here on the daily. What happened is I didn't get the trade because I was waiting for confirmation on a very bearish day. And I got a lower high here in my confirmation zone. But look, if I had taken this trade according to my entry rules, I would have been taking it from 243 and a half, and that would have made my risk $7.20, and it would have made my reward less than that. And so I didn't take the trade. So I said in the trendy room on Friday that I would have Amazon on my watch list again this week for a pullback buy, and here it is on this daily chart. I will watch it again. Everybody understand why I didn't go ahead and take this trade? If I had been aggressive and just taken the touch of this box, Hold on. Goodness. And then, I would have gotten a quick pop of about $3.50 so far, but it really isn't up to my target. So who knows? I don't know what I'll wake up to on Monday, but an aggressive approach in this buy zone, you did get the pop that I would be expecting. All right, but Amazon's back on my list. I threw BAC on my list here because financials, they're not a relative strength sector right now, but BAC has been consolidating here for quite some time. I know that shows that it's a high, but a little secret back in 2006, this was the sell zone back then. So this is actually all time high is 5508. So this uh, setup itself would be more for playing Bank of America on a pullback and starting a position here near the bottom of the bull channel, and then adding to full allocation in this golden profit area, which is also inside an up candlestick structure. And this is a trade that I would be buying more time on. So I would start the position at 52-ish and then wait for confirmation in this buy zone to add into full allocation here, and and buying time, right? Buying lots of time out to January to play it for a move initially to 53.73, then 54.5 by 55, and then potentially new all-time highs. So BAC is more of a longer term swing trade, definitely not a leap trade, but a longer term swing trade. Okay. All right. Now, let's talk about gold. What do you say? Gold is chopping. I can draw a gray box here and show you that gold is in some chop right here. Notice my weekly edges are in that chop too. So for me, the buy on gold is actually right down here. This is assuming that the bottom half of chop gets broken. And I'm playing this buy zone on gold that hasn't been tested yet. The daily 50 is right down there. Now, gold's been absolutely on fire. So, if I take a trade from here, then the top area of this chop would be a first target. So, that gives me about $7 of risk and about $12 reward. And then here's my next target area. All right. So I've got my alert on gold down here at this fresh buy zone on the daily chart, and I will wait and see if she sets up. Now let's look at Google. Google did nothing but chop last week, which shows relative strength considering that the market was red for the week. Claudia, why didn't I mark that gap? Because it was already tested. Do you see it? At one time, it was marked, but it was tested 3 days. So now I want to go for the fresh area. Great question, though. All right, Google. I just need this chop to break. Maybe there's some weakness in the market. I don't know. If it breaks and Google finds itself down here, I'm a buyer. But up in here, I mean, you can play the lower edge of chop. I will mention that. So you could play 179 to 175.19 as your buy zone, and then your sell zone is 285 to 291. I just don't want to get involved in that, especially when I'm not real sure that this market, based on yesterday's big rally, I am still remaining flexible to the possibility that there could be some further pullback. So I will be patient on Google, not messing around at the bottom of the chop. If you, hey, look, I can add Google right now to my watch list for PMZ trades, and I can day trade that chop. I'd rather day trade the bottom of chop than swing trade the bottom of chop, but that's just me. Okay. So, Google, I just put it on my PMZ focus list, and on Monday, we'll have that chart on there to day trade the bottom of this chop zone here. Okay, let's talk about Halliburton. Halliburton is another oil services type name like Schlumberger that's on my list. A buy zone would be in here, 2710 to 2647. But I would date this further. I wouldn't play it for a week, right? I'm talking out to December, even January here, and playing it from this zone. We got a nice looking rounding bottom. If I get a wick like there was yesterday, down in this area, it would be a buy for me. This has a risk of about 63 cents here. And the initial reward is about 96 cents. And then the next rewards, of course, are higher than that. All right. So Halliburton is on my list. Then, just in case, just in case the market wants to uh, further rotate. That was the word I was looking for. Just in case. Consumer staples. That's when this, I mean, that's a nice move, right? Yesterday, that rotation. That's a nice move on this XLP itself chart. Look, nice move, right? All right. If I look at these names, look, for swing trades for, a couple weeks, couple days, or couple weeks, couple months, KO is the only one that's going to meet my criteria. It's green candles. It's above the daily cloud, a pullback to this 200 SMA since we got above it. Now we look for it to be support. The daily 21 EMAs are curving up. My trendy cloud is starting to curve up. KO is my best choice if I want to trade a consumer Staples name. So on KO, yet or last week was an inside and up week. Candlesticks have went from red to white. This is my buy zone. This is on a weekly chart, so understand I would be buying time. You got about $1.24 of risk. Reward is about $2. And then you got some additional targets up in here. This is more of a defensive play if I were to start a swing on KO. All right, but that would be the zone. This would be my stop. This is a weekly chart. I would buy plenty of expiration, and I would be committed to weekly candle closes on Coke. All right, but my targets is 798, 71.71, 73.38, and 74.38. All right. LLY was one that I would use that leveraged ETF to trade. It is not one that I'm buying right here. I don't even know if I have chart. No, I don't have charts on this. So let's look at that daily chart on LLY. No candlestick structure. This thing has been 1, 2, 3, 4, 5, 6 days up. It needs a rest. Short, sweet, and simple there. 6 days up, it could consolidate, okay, for a few days. With that being said, phew, this is where we're going to find the sell zone on LLY. Where'd they go? There it is. All right, you see your inside and down right here. I'm just going to go up to the all-time high there. That's going to be the sell zone on LLY on our daily chart. All right. It's been tested, obviously, but I would need a pullback here. The first thing that I see is to run fibs. Everyone else see why I don't have candlestick structure there, so I'm going to run my fibs first. If I'm expecting chop, right, I would expect the 38.2 to the 618 to be that range of chop. All right. Even if we pull back into this gray zone, this trend is still bullish. It becomes a trend change if we close below right here. So, for that reason, that would be my stop. Now, of course, we would like to buy it as cheap as we can. So here at the 38.2, I'm going to put an alert, but if the price is looking like a falling knife, I'm not just going to buy, right? I'm going to wait for some confirmation. Notice here the daily cloud is all the way back at 890.75. If this thing just chops and finds support at this daily cloud inside of that zone, that would really be my key area to want to buy in. But I want to be alerted at the earliest possible entry for me. All right, so that's where I'm going to put that alert. Now, as far as targets go, this upper yearly edge would be my first target. I have to respect that upper yearly edge. Then above there, I'm looking at an upper weekly. So I'm going to go ahead and move this down just a little rather than putting another line right there. This is really my target zone. So 945 to 972 and a half, about 45 to $72 of reward if I were to take it off of this 38.2. But remember, I'd really rather take it down here closer to 890 to 860. All right. So, but here's my first target, regardless, and then these targets. All right. Got my alert set. And remember, I will use the leveraged ETF to trade this ELIL. All right. All right. Let's look at Merck. Now, if I am trading Merck, say I'm already in a Merck trade, I'm not going to double up on healthcare. All right. So, whichever one of these sets up for me first is going to be my first choice. Now, remember, I talked about Merck was looking like an ACDC setup. That's how I want to play this trade. All right. So, what I'm looking for is price to get above these arrows right here. That's the trigger long, and then these arrows are a target. And I can see that that is the towards the top of this selling pressure here. As far as a stop goes, you see the inside and up right here. That would be my stop. So let's say I take the trade above these arrows at 86.40. 85.24 is my stop. So I would have a risk of just over a dollar. All right. Then my reward would be just over a dollar. And my ultimate reward for this ACDC to play out is up here at the upper monthly edge, which that reward would be about three and a half, $4. So that's how this ACDC trade will play out for me. I'm either stopped out on a candle close below 85.24, or I'm taking profits and exiting the trade. All right. Only those two things could possibly happen. This is kind of like a momentum play above the decelerator arrows, target and target. All right. So, what do I want to do? Well, I want to create an alert down right around where price is at. And that's going to remind me to be looking for a long, for an ACDC play. All right. All right. NEE. This is one I took my profits off. I probably shouldn't have, but I only had one uh, contract, and it came to my first target. And so I went ahead and just exited it and was looking for a pullback. So a pullback would look like this, and this would be the trim area, and that would be my target. So let me throw an alert there, and NEE is still on my list. Again, if I take an AEP trade, I wouldn't take an NEE also. I don't want to be over leveraged. Let's look at PLTR. I believe I got this on here for a potential trade. Your lower yearly edge, or yearly, Lord, lower weekly edge is right down here. Here is the inside and up that we created yesterday. This would be a small risk of it relative to PLTR's price action. Would be a small risk of about $4.33 there. The first target, each one of these Fibonacci areas are going to be a target. And honestly, this area in here, because of the candlestick structure, I would look to be a pretty good target for a short term swing trade. Now, my upper weekly edge, if I play this edge to edge, is all the way up here, though. All right. Double double? Yeah, so I saw a um buy opportunity come up on ES Futures. Trendy Room members, y'all will have to remind me, but I think my zone was at 6565 or 6555. I'm not sure. That pullback yesterday, double double, came right into a nice trendy buy zone. And Unfortunately, if you didn't catch that, price rallied out of that zone, like 90 points. So where price is at right now, double double, I would need a pullback before I would be looking to buy ES futures. Okay. All right. So that would be the trade plan for Palin. What did I just do? That would be the trade plan for Palantir there, guys. All right. It would have the possibility of getting stopped out pretty quick. Boy, I'm batting 1,000, but I just removed all of my trendy edges, I think. Gosh. Trendy edges. There we go. All right. Sorry about that. All right, so that would be this is definitely a riskier type play because you have a very small buy zone and small risk for a name that moves $9.25 a day with only a $4 zone here, but I just wanted to give it to you because we get asked about Palantir a lot. So that's what the trade plan would look like. I would be more comfortable myself playing this as a day trade and using the PMZ if I really wanted to get involved in Palantir. Treat this as more of a day trading type strategy. Claudia, I am typically buying at the money calls or puts. RTX, nice bullish name. This is my buy zone. This was on my list from last week. I'm going to go ahead and leave it here. I'm going to go ahead and put an alert back near that buy zone and just see if we get a pullback here. It would be a buy for me. And then I would be playing it back up to 178 by 181.31. Schwab, that is just another financial name that eh, I put it on the list. I believe at the time it was an ACDC play. Let me look. Yeah. AC/DC play here, but it's not my favorite. I'm gonna go ahead and remove it from my list because it is just so stuck. I'm gonna go ahead and remove it. Walmart would be another more defensive type play. Oh wow. Another more defensive type play if the market goes risk off on your tech names. Walmart's one that they could run to. Now, Walmart's buy zones down here near 100.85. For transparency purposes, I'm a equity holder. This year, I've been an equity holder for a long time, but in the trendy room, we did buy equity in Walmart down here. So just for transparency purposes, so y'all know. But this is what the trade plan would look like for a buy on Walmart. This is my buy zone. It's about $1.30 of risk here. As far as a reward, I would be looking here at the upper weekly edge for a first target and then a second target at this monthly edge mid. And this would be my target zone on Walmart. So I'd be a buyer down here. These would be my trims, and this would be my target zone for Walmart. Again, more of a defensive play in the event that big money continues to sell off some of their risk on assets and rotate some money into these more defensive names. And then last but not least is XEL. XEL is a utility play. So NEE is also a utility play and AEP, I, I believe. Yes, a utility play. So this is the buy zone here on XEL. And then as far as targets go, if it got down to this buy zone, these would be my targets back to the upside. That gives you a risk of about a dollar 46, looks like dollar 46, and then your reward is $2.28 for that first reward, and then obviously better for these rewards here. That would require a pullback, quite a big pullback for XEL. But yeah, that's where I would be a buyer. You have a golden profit area down here and also inside and up candlestick structure. And I like that confluence. And you have the daily 50 SMA. So that's my buy, the dip area on XEL down there. All right. So I've went through each one of these names. I'm going to take a minute just to scan the chat and see if I missed anything, any questions. Yeah, thanks Deepak for reminding people to hit the like button. I appreciate it. It just helps with the algorithm. I look, I it's cool if I get whatever, a bunch of likes on a video. But really, my main focus for that is just so other traders that could be struggling, maybe YouTube will put this in their feed and I can help more people out. Long Hauler says XLE is quietly moving higher. Yes, yep, I noticed that too, Long Hauler. Yep, like the video, make sure you're subscribed to the channel. Yeah, Dave, Lily at the money calls are very expensive. That's why I would have to trade the leveraged ETF. Bob asks if the ACDC arrows are valid on all time frames or just 4 hour. We use the ACDC setup on a 4 hour chart. A 4 hour chart. You can put them on all your time frames if you choose to. On mine, they're only on the 4 hour chart because that's the chart we use to trade the ACDC strategy. Long hauler thoughts on Nvidia in at the fresh monthly edge. Let's look. NVDA here. Monthly edge, a daily chart will work just fine. Yeah. So it was a pullback by yesterday. That fresh edge that it pulled back to long hauler is down near 180 and it's already rallied $8 off of that. And just running fibs on this rally to say, hey, would you be a little too late? Well, you're in the bear channel now, which is your immediate resistance. You're coming up on the daily 21, which is now resistance. So I wouldn't be a buyer here. But yeah, at that monthly edge, that was a good dip buy. All right. Let's see. Got that. Sorry, guys. Just reading chat, trying to get an idea. Aw, thanks, Long Hauler. Appreciate you. Gary says, I know you buy at the money. What are your guidelines on expiration on swing trades? How far out do you go? Gary, I like to pay attention to the ATR. So if I have a target on, let's see, Apple, okay? If I have a target on Apple to the all-time high here, let's say, which was a 4 hour. Yeah, there it is. Okay. Here's my target on Apple, 275. If I'm buying at 266 to 260, I need price to move somewhere 10 to $15, right? So I'm going to look at what is the weekly and monthly ATR. And a weekly ATR is 11 to $12 and the monthly is 23. So I could get there in a couple of weeks. So for Apple, I could buy 2 to 4 weeks to expiration. All right? Awesome. All right, guys. Looks like I got through your questions. Again, thanks for joining me. I really appreciate your support. Make sure you hit the like button. It takes you 2 seconds. It's not a big deal. Just click that thumbs up button, and that'll give me a like there. Make sure you're subscribed to the channel. I put videos out on everything from technical chart analysis to trading psychology, all kinds of stuff that helps you to become more disciplined, consistent, and profitable. Um, I hope you have an awesome weekend. If you're not a part of the trendy trading room at Simpler Trading, I invite you to click on the link to join us in that room. We have a great community of traders. My trading partner, that is also my trading mentor, Trendy John, is a fabulous trader and teacher. He's in the room with me and we spend hours every single day educating and live trading. So I hope you'll join us in there. Have a great rest of your day. Have a great weekend, and I will see you in the next video.